There's always a lot of back and forth on X/Twitter about, is this good for Bitcoin? Is this bad for Bitcoin? There's very colorful conversations about protocol proposals, about software proposals, about developer initiatives, about applications. The latest is, all the debate around ordinals, inscriptions, BRC20 tokens, but you've always got covenants and drive chains and if we look back, right, probably the most formative period in the history of Bitcoin was the block size wars, and that really did it did define the network and defined Bitcoin in a very strong fashion. But I think that if we look forward another decade or two or three, and certainly over the course of 100 years, there are going to be more and more of these issues that'll pop up. There'll be more constituents that will get involved in the discussion. And I don't really think having a debate in 240 characters or less on Twitter is terribly constructive for, a topic which requires a lot of nuance and subtlety. And I also think that it's important to be principles-based in the way we discuss these things. I think if we all focus upon what are our assumptions, what are our principles, then I think they'll be less confrontational and less combative and more constructive, right, in the community. So I thought it'd be useful to have kind of a constructive dialogue about Bitcoin philosophy, Bitcoin principles, frameworks of analysis, so there's a basis for whatever comes next.
Hey, crypto rockstars. Welcome back to Crypto Street, where we break down the crypto roller coaster in style. Hit that subscribe button, buckle up, and let's talk about the whirlwind of crypto drama. Arthur Hayes, the maestro behind BitMEX, just unleashed a chilling prophecy. He's waving a red flag, screaming at if big dogs like BlackRock get too cozy with Bitcoin ETFs, it could spell doom for our beloved crypto. Why? Because they might turn Bitcoin into a mere tradable security, sidelining the essence of decentralization. It's a showdown between tradition and rebellion. SEC Chair Gary Gensler just hit the alarms. He's shouting from the mountaintops about crypto non-compliance, warning that it undermines trust and puts good players at a disadvantage. The Wild West vibes are strong, and Gensler's not holding back punches. Some call it a showdown, others a circus, but one thing's for sure, the SEC is in the crypto arena, and it's getting wild. The whales are on the move. Reports are buzzing that Bitcoin whales just dumped 50,000 BTC, a jaw-dropping $2.2 billion move. But guess what? Bitcoin's holding steady, showing us the resilience it's famous for. The market indicators are doing a dance, RSI playing it cool, and MACD going bullish. And as Matrixport predicts a $50,000 Bitcoin by Jan 2024 with the SEC's ETF blessing, it's a roller coaster with a promise of a thrilling peak. Now let's continue our discussion with Michael Saylor.
If you had an algorithm that didn't include computing power at all, it's just electricity. But of course, electricity isn't terribly scarce, and computing power isn't terribly scarce. So the idea of SHA-256 hashing creates a very unique digital power protocol. It's something where you can create custom silicon. So you have custom ASICs that are generating lots of SHA-256 hashes. And now we just crossed 500 exahash. That's a lot of power. But what's really critical, I think, about the power protocol is that it allows you to construct a silicon machine with a massive mechanical advantage. Like a custom ASIC, custom silicon gives you a 1,000x or 2,000x advantage over a general purpose CPU. And what that means is that what we have here is that 3 interacting protocols which create 4 types of scarcity. The first level of scarcity is asset scarcity. The second level of scarcity is bandwidth scarcity. There's a third type of scarcity, which is power scarcity. SHA-256 hashes are a very scarce form of power, right? They can only be created by Bitcoin mining equipment. And so there's a fourth type of scarcity, which is technical scarcity, technology scarcity. The ability to design, a high performance semiconductor chip that does SHA-256 hashing, right? What Bitmain has as a core competency, right? If you can create that. So in order to guarantee the asset scarcity, you have to have bandwidth scarcity. And in order to guarantee the bandwidth scarcity, you have to have power scarcity. And in order to guarantee the power scarcity, you need technology scarcity. And so you're really looking at like four harmonics or four types of scarcity, and they come together and they create a network that has integrity and efficiency, right? I need the efficiency. Like what's efficient? Here's an efficient power protocol. I have a gun. I'm in a room with 100 other people. One person with a gun that costs $300 has the ability to secure $1 billion in a room of 100 other people. It's a very efficient way to secure the money, right? Whoever has the gun, now take away the gun, put the $1 billion in the middle of the room, and now your new power protocol is your fists. Now you can imagine, now you've got 20 people punching 30 other people, right? Now the outcome becomes very ineffective. Another power protocol is, I'm going to secure the $1 billion with $100 million of staked money. You can see that the issue with that is in a staked economy, I have to actually allocate 10 or 20% of the capital to protect the rest of the capital. That doesn't scale very well. So when you actually get to the point where you're creating machines, whether it's a construction crane or whether it's a gun or whether it's a semiconductor chip, you have inserted know-how in order to channel energy, in order to actually exert power. And when I talk about, scarcity of power, well, the Bitcoin miners own all the SHA-256 ASIC chips. So, on any given day, if every power company or electricity company in the world wakes up and decides to attack the Bitcoin network, they can't really do it because the computing power, the digital power is scarce and they don't have it. If any government wants to attack the network, they can't do it because they don't have the power. The actual silicon machine is in the hands of the network operators. And so that creates a certain type of efficiency and stability, and you can't really build a civilization without it. I mean, it's the same kind of efficiency you get when you build a dam, right? You dam a lake and all of a sudden you're generating hydropower. Or the same efficiency you get when you have a construction crane and a 150-pound person can lift 20 tons in the air, 1,000 feet, right? It's clear you're not going to do it without having a machine. So I look at the entire network and I think it's a pretty beautiful set of integrated protocols because the power protocol protects the transactions every 10 minutes. And the transactional protocol is a market-driven protocol where people are bidding to put their transactions into the block space. So as the ecosystem grows, the bid for transactions grows in a classic market economy fashion. And what you have is Austrian economics dictating which transactions will get implemented based upon subjective value of all the participants in the ecosystem.
Ripple is now registered as a virtual asset service provider with the Central Bank of Ireland. The company explained that it will seek to provide services to clients across the European Economic Area once the Markets in Crypto Assets Regulation, MiCA, comes into force at the end of 2024, subject to the acquisition of other necessary licenses. Crypto exchange Coinbase has received approval as a registered virtual asset service provider in France. This registration allows Coinbase to operate in France, continuing our plans to grow across Europe, the crypto platform detailed. France is an important market for Coinbase. We're dedicated to partnering with high-bar regulators across jurisdictions to help update the financial system. Galaxy Digital CEO Mike Novogratz expects the U.S. Securities and Exchange Commission, SEC, to approve a spot Bitcoin exchange-traded fund, ETF, by January 10 next year. Subsequently, he foresees the cryptocurrency reclaiming its all-time high of $69,000 and wouldn't be surprised if it surpasses that price level. The executive also predicts progress in U.S. crypto regulation, expecting changes in leadership at the Treasury Department and the SEC after the upcoming presidential election. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.